Good morning. Thank you all for being here. A special thanks to our witnesses who've taken the time away from their undoubtedly busy schedules to be with us here this morning. We really do appreciate that. Earlier this year, our committee heard from a gentleman named Scott who owns a small mattress factory back in Franklin, Ohio. Scott wants to pay his taxes. He probably wishes he could pay less, but more than anything, he wishes the process could be simpler. He wants a flatter and fairer code that's more predictable. Scott is emblematic, I think, of many small businesses all across this country. There are millions of Americans out there, just like Scott, who feel the weight of the tax code every day. I speak to them every time I'm back in my area and back in Ohio, and I hear the same concerns again and again. More Americans are frustrated with the process of paying their taxes, more so than even actually writing the check to the government. I'm sure there are exceptions, but it's far too complicated. It's unacceptable, and we must do better. Making the tax code simpler is particularly important for America's small business owners, as they are disproportionately affected by the tax code's complexity. This is a finding that unfortunately has not changed with time. Studies conducted for the Office of Advocacy at the SBA over the past 10 years found that small firms pay 67% more to comply with the tax code than large firms do. A recent update to those advocacy studies found that firms with less than 50 employees pay on average over $1,500 per employee in tax compliance costs, whereas firms with more than 100 pay $647. It's because of statistics like that in 2013, this committee asked the Government Accountability Office to examine the dynamics of small firms and their tax compliance burden. The GAO will be testifying today to outline their findings. And I would like to point out that right at the end of the report, the GAO outlines 25 separate recommendations that they have made to the IRS over the past few years that could and probably would, in my estimation, help reduce taxpayer compliance burdens. The IRS has implemented none of them, and that's a problem. To be fair, I'm not only blaming the IRS for this problem. Congress has been guilty. The tax code has grown to nearly 74,000 pages. The IRS did not do that. Congress did. This committee is and will continue listening to the American people and urging Washington to make the tax code simpler and less stressful. As I stated earlier, we have the GAO here today to discuss their illuminating report in greater detail, and we will also hear from tax experts who will suggest ways to reduce the strain on small firms through comprehensive tax reform that reduces the complexity faced by small business. I'm looking forward to the testimony of everyone here today, and I again want to thank each one of you. And I would also mention, originally there may have been an indication we were going to have two panels, but I have found over the years when we do that, oftentimes members have a certain amount of time that they can be here, and they have other committees and obligations, and we'll listen to one panel and then not the other, and this is really a much better way to hear from all of you, and so that's why we changed that around. So if there was any inconvenience to anybody, we apologize. And I would now like to yield to the ranking member, Ms. Velasquez, for her opening statement.
Thank you, Mr. Chairman. The success of the American economy relies heavily on its vibrant small business community. Small businesses employ 50% of our workforce and generate nearly $6 trillion in revenue. When talking with small business owners, we often hear that an intense focus on the bottom line is necessary to succeed. They know every dollar counts and devote significant resources toward that goal. One area every small business owner must focus on is complying with our tax laws. The tax compliance burden on small businesses takes many forms. Most notably is the complexity of the code itself. With so much paperwork to fill out every year, the majority of firms report spending more than 40 hours preparing their tax returns. To better understand the causes of the burden and what the IRS is doing to reduce it, this committee requested the GAO report at the center of today's hearing. That report reinforced much of the anecdotal evidence we have heard on previous occasions. The complexity of the tax code creates a number of fixed cost items that do not scale with the size of the company. As a result, smaller businesses are disproportionately impacted compared to their larger counterparts. One way to address this problem is by simplifying the tax code. By reducing its complexity, small businesses will see decreases in these fixed costs as the need for expert preparation and the time commitment will both be reduced. The complexity of the tax code cuts both ways. Taxpayers' non-compliance cost the IRS nearly $350 billion every year, prompting numerous initiatives to close the gap. One of them is the use of Form 1099-K to track electronic payments. By collecting data directly from payment processors like Visa and PayPal, the IRS intends to cut down on underreporting and spur more businesses to voluntarily comply. Unfortunately, if the information does not match up or errors are made, it could trigger costly and time-consuming audits for law-abiding firms. In response, the IRS began the payment mix comparison tool pilot to reduce the burden, which GAO was also asked to look at. While they found IRS payment card matching program has the potential to reduce non-compliance, it was unclear whether it would reduce taxpayers' burden. GAO also found that the majority of small businesses use pass-through entities like partnerships and S corporations, which prevents them from receiving a number of business-friendly tax incentives. The average corporate tax rate is just 12.6% compared to 31.6% and 29.4% that S corporations and partnerships pay. Comprehensive tax reform, not only corporate, is necessary to spur additional economic growth in our small business sector. In other words, small entities are not looking for special treatment, just equal treatment with their larger counterparts. One of the principal tenets of tax policy is that we strive for simplicity and some semblance of certainty. The tax rules should specify when the tax is to be paid, how it is to be paid, and the amount to be paid. Through comprehensive tax reform, Congress can provide small firms with both by limiting yearly policy changes, which will help them more easily plan their business investments, operations, and estate planning based on those known laws. I look forward to hearing from today's witnesses on this finding and recommendations contained in GAO's report, and I thank you for being here today. Thank you. Mr. Chairman, you're back.
Thank you very much. And if committee members have opening statements prepared, we'd ask that they submit them for the record. And I'll take just a moment to, before I introduce the panel, to kind of explain our rules. You get 5 minutes to testify. There's a lighting system. A green light will be on for 4 minutes. A yellow light will let you know you got a minute to wrap up, and then the red light will come on, and we ask you to stay within that as much as possible, and we impose those same rules on ourselves, so we get 5 minutes to ask questions. And I'll now introduce our panel. We'll begin with Mr. Mim, who's our first witness. Chris Mim, Managing Director for Strategic Issues at the United States Government Accountability Office. He leads GAO's work on government oversight and transformation issues such as performance management and collaboration, federal budgeting, regulatory policy, and federal tax policy and administration. He's a fellow and former board chair of the National Academy of Public Administration and an adjunct lecturer in public administration at the University of Maryland Graduate School of Policy, and we welcome you here this morning. And our next witness will be Don Williamson, a professor in the Department of Accounting and Taxation at American University. He also serves as the executive director of the university's Kogod Tax Center, a research institute focusing upon the interests of small business. He has also served as an adjunct professor at American University's Washington College of Law. Professor Williamson published over 50 articles in professional and academic journals and was recognized as the Bureau of National Affairs Outstanding Author for 2007. And welcome this morning. And our next witness will be Troy Lewis, who is Vice President and Chief Enterprise Risk Management Officer at Heritage Bank in St. George, Utah. He's also the manager of Lewis and Associated, a small accounting firm in Draper, Utah. Additionally, he serves as adjunct faculty in the taxation department at Brigham Young University. He's also chair of the tax committee at the American Institute of Certified Public Accountants, whom he is testifying on behalf today. We welcome you as well. And our next witness will be Les Vitale, Managing Director and Partner at McGladrey & Pullen in Boston, Massachusetts. Mr. Vitale brings over 30 years of professional experience to his clients, and his broad base of knowledge includes specialties in the traditional accounting, auditing, tax, and assurance services. He has authored technical articles and developed policy and procedural manuals for the firm in the areas of quality control, staff training and evaluation, recruiting, and technology. We thank you all for being here, and I would now like to yield to Ms. Velasquez to introduce our final witness.
Thank you, Mr. Chairman. Stephen Mankowski is the Vice President and National Tax Chair of the National Conference of CPA Practitioners, the nation's second largest CPA organization. His firm has been advising small firms on accounting and tax issues for over 30 years, helping 2,000 clients annually. As an expert in the field, Mr. Mankowski has participated on IRS panels regarding compliance burden for small businesses, and as a member of the NCCPAP, partook in the electronic payment pilot program that was examined by today's GAO report. Mr. Mankowski graduated from LaSalle University. Welcome to the committee. Thank you.
Thank you very much. And we'll begin with Mr. Mim. You're recognized for 5 minutes.
Well, thank you, Mr. Chairman, and Ms. Velasquez, and members of the committee. It's an enormous pleasure and honor to be able to be with you here today to discuss our report on tax compliance burden in small businesses. That report is being released today, and it's available, of course, on the GAO website at gao.gov. As this committee is well aware, given the important role that small business plays in the U.S. economy, reducing the cost of compliance with the tax code frees up additional resources to expand, hire new employees, and further contributes to economic growth. At the same time, small business tax issues are a significant contributor to the annual tax gap, which is the difference between taxes owed and taxes paid on time. And as both the Chairman and Ms. Velasquez mentioned in their opening statements, and IRS takes as a given as well, is that the overwhelming majority of taxpayers want to pay their taxes in a full and timely manner. It's just we need to make sure that we create the environment and give them the tools that they're actually able to do that, including reforms to the tax code, as you pointed out. Thus, the key challenge for IRS is that they must minimize taxpayer burden while encouraging, and as the Chairman pointed out with his reference to his constituent Scott, making possible voluntary compliance with the tax code. My remarks today highlight the key findings of our report. I know you've seen it, so in the interest of brevity, I'll just hit kind of 4 very key points on that. First, most small businesses are individuals, but most small business income is generated by partnerships and corporations. According to Treasury analysis, small businesses make up about 99% of businesses in the United States. Treasury defines a small business for this purpose as individuals or entities with business activity that is less than $10 million in total income and deductions. Approximately 69% of small businesses, or about 1.6 million, are individual taxpayers who report business income. The remaining 31%, or roughly 7.3 million, are partnerships or corporations. On the other hand, in 2010, individuals generated 23% of total income of all small businesses. This equates to about $1.4 trillion into the economy. Small business partnerships, S-corps, and C-corporations accounted for the remaining 77% of small business income, and that represented $4.5 trillion in income. My second point. Tax compliance burdens vary across small businesses. The variance is driven by factors such as business assets size, by type, for example, is it a sole proprietor or a C corporation, number of employees, and industry type. Our report details how certain tax compliance-related activities create burden. The report groups these into general categories such as income tax activities, employer-related tax activities, and third-party information reporting. As the Chairman mentioned, that SBA and IRS data has shown that there are very real costs, both in terms of hours and times, with small businesses to apply or in order to be able to comply with the various requirements. My third point this morning is that IRS does consider small business compliance burden in its decision-making, but improvements are clearly needed. We interviewed small business representatives, including those from the AICPA, who said that IRS's outreach efforts have been effective in identifying opportunity to reduce compliance burden. As one example, IRS worked with stakeholders to develop a simplified method for small businesses to calculate the home office deduction. That change was introduced in January of 2013. Previously, businesses had to complete a complex property depreciation calculation. As I'm sure you know now, had heard from your constituents over many years, that had been a very real pain point for small businesses. Nevertheless, and despite that real and important progress, stakeholders also pointed to a number of areas where IRS burden could be further reduced. These are areas of IRS customer service, among others, those open recommendations that the Chairman mentioned. We have recommendations in these areas that we believe aggressive action from IRS that, if effectively implemented, could improve service and help reduce the tax gap. Fourth and finally, IRS's evaluation of its payment card pilot has strengths, but needs to be more fully developed. This is obviously a point that Ms. Velasquez was making in her statement. IRS began this pilot program in 2012, and what it does is it compares payment data from payment settlement entities, such as credit card companies, with income reported by small businesses. The evaluation plan that IRS has for the pilot has many elements of a well-designed evaluation, which is a bit of an anomaly for IRS. They typically do not do that good of a job with their evaluations. I mean that as a positive statement, I should say. As a result, IRS has been able to make rapid and ongoing assessments of pilot activities and to make changes based on lessons learned. However, the overall evaluation lacks key performance measures for the pilot's goals, so we don't know whether or not it should be implemented more broadly, clear evaluation criteria, and other elements. With that, let me end at that point and obviously take any questions that the committee may have. Thank you, Mr. Chairman.
Thank you very much. We appreciate that. Mr. Williamson, you're recognized for 5 minutes.
Chairman Chabot, Ranking Member Velasquez, and members of the committee, thank you for the opportunity to offer my suggestions for reducing the tax compliance burden on small businesses when preparing their tax returns. My name is Don Williamson, and I'm a professor of taxation at American University's Kogod School of Business, where for the past 30 years I have directed the school's Master's in Taxation degree program. The MST program at American offers graduate courses in federal taxation to CPAs, experienced accountants, attorneys, and others who wish to expand their knowledge of our nation's tax law. As part of my responsibilities at American, I am also the Executive Director of the Kogod Tax Policy Center, which conducts nonpartisan research on tax issues affecting small business and emerging entrepreneurs that will enhance compliance while reducing compliance costs. And for the past 25 years, I have had my own tax preparation and tax planning practice for small businesses in Falls Church, Virginia. My written testimony describes some of the tax compliance burdens imposed on small businesses that consume time and resources that cannot be employed in their businesses to create more jobs. Specifically today, in my testimony, I want to recommend to the committee that our tax code be amended to permit more small businesses to adopt the cash method of accounting on their tax returns. Generally, a taxpayer using the cash method of accounting recognizes income or deductions when cash is received or paid. An accrual basis taxpayer, on the other hand, must recognize income or expenses when all events fixing the right or obligation have occurred, regardless of when cash is paid or received. As detailed in my written testimony, I believe that more small businesses should be allowed to adopt the cash method of accounting, rather than the current law requirement imposing the accrual method that is uniformly considered more complex and offers few advantages to small businesses whose chief concern with regard to their financial condition is their cash flow. It is important to note that the method of accounting adopted by a business, whether the cash method or the accrual method, only affects the timing of when a business reports income or deductions on its tax return. The accounting method a business uses does not determine whether an item of income is taxable or expense is deductible, and does not affect the total income and deductions a business will recognize over its lifetime. However, despite the greater simplicity and better fit of the cash method for small businesses, the Internal Revenue Code continues to deny the cash method to corporations with average gross receipts exceeding $5 million. As discussed in the Senate's Bipartisan Tax Working Group report on business income tax issued this month, I urge Congress to increase the current threshold for use of the cash method to $10 million. Raising the threshold to $10 million will mean that 99% of all businesses in the United States could adopt the cash method. But even when the cash method is available to a small business, certain judicial doctrines, such as constructive receipt for the recognition of income, impose unnecessary complication on a small business simply to accelerate the reporting of income by, in most cases, a few months before actual cash is received. Also, the requirement that a cash method small business may not deduct its cash outlays to purchase or produce inventory until that product is sold may satisfy accounting theorists, but offers no immediate tax benefit to small businesses that expend considerable sums creating jobs. To further reduce the compliance burden on small business, therefore, I urge Congress to go beyond the proposals discussed in the Senate's bipartisan tax working group report and enact a simplified cash method of accounting described in detail in my written testimony. Under this method of accounting, a small business would simply look to its checkbook to determine its taxable income. It sounds simple, and it is. Permitting small businesses to elect a simplified cash method of accounting will reduce tax compliance costs, ease the burden of tax administration, and clarify the measurement of taxable income. Thank you again for the opportunity to testify, and I would welcome any questions from the committee.
Thank you very much. Mr. Lewis, you're recognized for 5 minutes.
Thank you. Chairman Shabbat, Ranking Member Velasquez, and members of the committee, thank you for the opportunity to testify today. My name is Troy Lewis. I am the Vice President and Chief Enterprise Risk Management Officer at Heritage Bank in St. George, Utah. I'm also a tax practitioner, adjunct faculty member at BYU, and chair of the Tax Executive Committee of the American Institute of CPAs. I'm pleased to testify today on behalf of the AICPA. We applaud the leadership taken by the committee to consider ways to reduce the complexity faced by small businesses when preparing their taxes. Small businesses are the foundation of the U.S. economy, employing over half of the private sector workforce and creating nearly two-thirds of this nation's new jobs. Unfortunately, compliance with federal tax laws can act as a roadblock. Unlike large corporations, time spent by small businesses in complying with tax laws is much more costly because they do not have the luxury of a large customer base with which to spread those costs. We need to keep in mind that time devoted to tax law compliance has an impact on business creation, job growth, and economic prosperity. First, it is imperative that small businesses and their tax return preparers have the ability to communicate with the IRS when preparing their taxes and addressing compliance issues. However, there has been increasingly limited access to the agency. Through an informal survey we conducted earlier this year, we learned that over half of our members were either somewhat dissatisfied or very dissatisfied with the services they receive from the IRS. This is no surprise, considering that only 17% of our members said that the agency answered their telephone calls within a half hour. Most of our members were on hold for extended periods of time or didn't have the time to wait that long. Let me share with you one member's experience. Quote, "I was on hold for over an hour and a half. When the IRS agent finally picked up the call, they needed to transfer to another agent. I had to wait on hold for another hour. Finally, I received a recorded message that the office was now closed and I needed to call again the following day." End quote. Unfortunately, this is not a unique experience. Many taxpayers also experience the IRS's so-called courtesy disconnects, where the IRS disconnects a call without taking a message if the caller has been on hold for 2 hours. Nothing is more discouraging, frustrating, or inefficient for a caller than being hung up on after waiting for nearly 2 hours. We understand the IRS has new initiatives and vital obligations, but taxpayer services must remain a high priority in order for small businesses to receive the assistance they so desperately need. Another challenging tax compliance obligation that small businesses recently dealt with was the tangible property regulations. These rules, which address how businesses should report the purchase and improvement of property, are almost 500 pages of technical guidance and procedures. Now, to be fair, the regulations clarified some rules. However, they were still significantly burdensome for small businesses. The AICPA pushed hard for relief and stressed that time was of the essence. The IRS finally issued partial relief on February 13th, well into the filing season. Unfortunately, some small businesses and their tax practitioners had already spent time and resources attempting to comply with the regulations. If the IRS had acted sooner, small businesses could have been spared some administrative burden. There are other issues that remain open in regards to the repair regulations. Currently, to deduct amounts in excess of the safe harbor threshold, taxpayers must prove that expensing such amounts in the current year clearly reflects income. However, the clear reflection of income test can be challenging for any taxpayer, but especially for small businesses. These rules force taxpayers to depreciate the cost of items such as a computer or a printer over a number of years. To provide meaningful relief, Congress should increase the $500 safe harbor threshold to $2,500 and index the amount annually for inflation. To further reduce burden, we also suggest that you allow taxpayers with reviewed financial statements to use the higher $5,000 threshold. Finally, we encourage you to examine all aspects of the code to reduce the complexity faced by small businesses when preparing their taxes. For example, penalty provisions need to consider their effect on voluntary compliance, and employers operating across state lines need a uniform national standard for non-resident income tax withholding rules. The income tax deadline should also promote an efficient flow of taxpayer information to provide small businesses sufficient time to file accurate returns. In summary, small businesses and tax practitioners are interested in and so desperately need tax reform to reduce the burden that hinders growth. Again, with that, Mr. Chairman, thank you for the opportunity to testify, and I would be happy to answer any questions.
Thank you very much. Mr. Vitale, you are recognized for 5 minutes.
Thank you. Thank you, Mr. Chairman, Ranking Member Ms. Velasquez, and members of the committee. My name is Les Vitale. I'm a partner at McGladrey, a national firm. I work out of the Boston office, which is comprised of about 650 professionals. McGladrey is a firm that has 8,000 professionals that practice in 80 cities across the country. In addition to that, the group that I practice in specifically is a small practice group called the Local Market Group. The Local Market Group is made up of about 50 professionals, including 5 partners. My client base, in particular, represents about 40 small businesses with sales ranging from under $5 million to up to $100 million in revenue, with employees from 10 to just about 200. All of my clients are privately owned, and many are family owned. The majority of my client companies, are S corporations. In preparation for today's testimony, I determined that it was best that I poll the practice group so that it was representational of members of my firm. And in trying to come up with some common themes, we did so, and we came up with 3 challenges that I'd like to present to the committee today. And those subjects include the TARS legislation relative to depreciation, privacy and security, and also S corporation basis. So the rules with regards to TARS legislation, in a word, are onerous. The depreciation rules were originally set out to spread the timing of a deduction, so there really is no question about the fact that something is deductible. So it's a question of not if, but when. So one of the items that was pointed out by my colleague, Mr. Lewis, was that there are differences between small and large companies in what they're allowed to do under these regulations, which has created a burden for the small client. Many of my companies do not have what's referred to as an applicable financial statement. Large companies, in particular large public companies or very large companies that have audits, do. The rules, therefore, are different. They are allowed larger thresholds, up to $5,000. The small clients in our practice unit, the small S corporations, the family-owned businesses, have a $500 de minimis exception amount only if they elect it. When polled, the members of my practice unit said that one of the things that they've spent the most time on this year is the administrative and compliance requirements related to the TARS legislation. That legislation and those rules required and are requiring the filing of a Form 3115. 3115 could take on average from 10 to 15 hours of time, larger corporations even longer. One of the suggestions and one of the recommendations that we would make in our firm, and we've talked about this internally, is the simplification of the election requirements in electing safe harbor and for the de minimis rules. One method would be to simply modify the current Form 4562, which is the current depreciation form. It could simply be redesigned to include the questions that are asked of the 3115 and really reduce down the time requirements to prepare that form. We would also suggest that the safe harbor amounts be revisited and consider raising those levels to $5,000. One of the things that the laws do not take into account is the degree of differences between companies. Service companies versus innovation companies are very different. Their needs and their investment in capital is very different, and there is really nothing in the code, in the current constitution of the forms, that allows for that flexibility. In addition to that, I wanted to cover briefly the privacy issues. In our firm, we have had over 20 breaches in the last 4 or 5 months. I have 2 going on right now. Those have required a significant amount of time, and I know I'm not here to suggest that I have the answers to security and privacy breach, but the time that's spent on the phone, as also pointed out by my colleague, has been significant, and I personally have spent probably 15 to 20 hours trying to resolve 2 cases. The last item that I wanted to cover was S corporation basis. I have a client case right now that is under audit. The client has closed the business. They've been in business for about 5 years. They lost money each year, and the auditor has spent 3 days on the audit right now at great expense to the client, and it's all about the amount of basis that the client had. The basis rules are in my dialogue are contained in my testimony for you to review. And thank you very much for your time to present these.
Thank you very much. Mr. Mankowski, you're recognized for 5 minutes.
Chairman Chabot, Ranking Member Velasquez, and members of the committee, thank you for inviting me to testify today. My name is Stephen Mankowski, and I'm a CPA. I'm the Executive Vice President and Tax Policy Chair of the National Conference of CPA Practitioners. Tax compliance burden has been defined in the GAO report on small businesses as the time and money spent by the taxpayer to meet tax obligations, not the associated liabilities. An objective of the administration and the IRS has been to minimize taxpayer burdens and eliminate unnecessary ones. There has been a decided change in how businesses transacted. Credit cards have become the norm. Business owners have had to accept the payment processing, compliance, and equipment rental costs as cost of doing business. Online sales have caused the IRS to question the voluntary compliance of reporting all revenue. As a result of a 2008 law, payment card processors had to begin reporting credit card receipts to the IRS and the merchant in 2011 and added the number of monthly transactions for 2012. Once a merchant annually has 200 transactions and sales of at least $20,000, they will receive Form 1099-K, merchant card and third-party network payments. Initially, 1099-K results were to be placed directly on the specific lines on tax returns. This changed as many issues arose. Specifically, there was confusion on how sales tax, gratuities, and merchandise returns were handled on 1099-K. Those same concerns still exist and are just some of the reasons that the IRS hasn't taken a stronger stance on the use of the information on these forms. Business owners track revenue by specific categories such as sales, consulting, or rental income. They don't track revenue based on how they are paid. Trying to accurately track revenue to match the 1099-K would actually result in an accounting nightmare. To further complicate the record keeping, businesses receive a 1099-K for each specific payment processor, one for MasterCard, Visa, one for American Express, one for PayPal, and another for Discover, and even a second round if they change processing firms during the year. From the IRS viewpoint, this form has helped increase voluntary compliance among small businesses. Many virtual businesses that had previously flown under the radar are now filing income tax returns and paying taxes. In addition, the 1099-K has allowed the IRS to establish a database whereby they can obtain a better understanding of the revenue sources within particular industries. The IRS instituted a pilot program for the 2015 filing season called the Payment Mix Comparison Tool that utilizes this database. NCPAP was invited to participate in this program, which allows our members to enter selected data from the client's 1099-K. The tool accesses the IRS database by a specific merchant category code, or MCC, and compares various ratios for a business. The result tells the CPA if the results are within the specifications of the database. A common flaw with the 1099-K is that if the payment processor enters an incorrect MCC code for a business, the results could be beyond the standard deviation, which may result in an IRS notice. The results from the tool have been strictly for the benefit of the taxpayer and for informational purposes only. Currently, the IRS is not capturing data from this tool. The database will continue to improve as the volume of 1099-K data is input into the tool. Unfortunately, the tool did not get the expected usage due to practitioner concerns. Specifically, many practitioners did not believe that the IRS was not tracking results, the name of the tool was not the best, and the tool did not go live until February 2015, after most CPAs had already completed their training and had begun preparing tax returns. In addition, many felt there should be a better result besides typical or unusual. Hopefully, this program will continue and improve next year, and we'll see more usage by tax professionals. If used properly, this tool could actually reduce taxpayer burden by addressing issues of credit card revenue while the data is still fresh in the business owner's mind. The Form 1099-K program also has the potential to be a disaster. This is a repeat of warnings from NCPAP and others in the practitioner community when the Form 1099-K matching program was first proposed. The IRS should use all tools possible to ensure tax compliance and close the tax gap. However, as the GAO has correctly indicated, this is a flawed system with no real ability of matching gross income with the 1099-K reports. I'd like to thank Chairman Chabot, Ranking Member Velasquez, and all members of the committee for the opportunity to present this testimony today. I'll be happy to answer any questions. Thank you.
Thank you very much. I think it was excellent testimony by all the witnesses here this morning, so we thank you for that, and we'll go ahead and open up the questions, and I'll yield myself 5 minutes to begin. I'll start with you, Mr. Mim, if I can. In your report, you identified around 25 past GAO recommendations that, if implemented, could help reduce compliance burden on small businesses. How seriously do you feel that the IRS has taken the GAO's recommendations thus far?
I think on the whole, Mr. Chairman, the IRS does take our recommendations seriously. I mean, they have a wide-ranging and very difficult responsibilities. We are always making recommendations.
Have they implemented any of them?
They implement quite a few. The ones that we're talking about today are ones that we believe that they have not yet implemented, and there's still plenty of opportunities on that. I mean, just as an example, the telephone answering over the last year, 2014, there was if you called, 67% of the time you could get through. 2015, you were getting through 59% of the time, or I'm sorry, 39% of the time. These are the courtesy disconnects. What a Orwellian term that Mr. Lewis was mentioning. The wait time from
the courtesy disconnect was referred to. If you've been waiting on there for 2 hours, their courtesy is to basically hang up.
They hang up on you. Yeah. Now, very often, though, you beat them to the punch, because in the hang-up rate in 2014, the individual saying, I can't take this anymore, was 29% of the calls. It was 57% this year. And that's also explained by the wait time. The wait time in 2014 was about 17 minutes and about 28 minutes this time. So, I mean, and these are averages. And so what we've urged IRS to do is a couple of things. One is that they need to benchmark their telephone assistance service. They're not the only organization in the United States that has a call center, and so there's plenty of other places that they can benchmark against. Second is that they need to then also be thinking of an integrated strategy that thinks about how they can provide service and information to taxpayers using both the phone, and then also using augmenting the IRS website and having more of an internet-based strategy for getting information out there. And then finally, they need to engage the Congress, as that the resources have been going down in recent years. They need to make sure that they take a strategic approach, sit down with the Congress and saying, these are the trade-offs that are being made. If there are different trade-offs that we should be making, let's, please give us guidance on that. But those are all open recommendations.
Thank you very much.
Yes, sir.
Mr. Williamson, I'll turn to you next. Now, you're a professor, and then you also have a tax preparation service yourself. What's the biggest one or two complaints that you hear from the small businesses that you do their taxes for?
Well, they do not understand the law. And when taxpayers do not understand the law, they come to disrespect the law. And we all know what happens next, and that's fraud, that's cheating. So what we need is simpler rules that I, as a tax return preparer, can explain to my clients, and they can accept me to prepare the return and pay their fee to pay their tax. I think all of us here today have said taxpayers want to pay their tax. I hail from Utica, New York. I know the people in Utica, New York want to pay their tax. Right. But the problem is they do not understand the law.
And you indicated that you feel strongly that going to the simplified cash method of accounting would be one of those critical things we could do to make it more understandable.
The clients I represent, and I represent the smallest of the small probably at this table, where $300,000 or $400,000 a year of sales on a Schedule C is a living for your family. Those folks don't need to do depreciation schedules and be on the accrual method and do cost of goods sold. They know what they need. They need cash in the bank, and they're willing to take some of that cash and pay their tax with it.
Thank you. Mr. Lewis, you said something which I agree with very much, and if you wanted to expound upon it briefly. You said that the time spent by your average small business person in compliance with the tax code is time that they're not spending on what their basic business is and having a successful business so they can perhaps expand and create more jobs for more people. Is that accurate, and did you want to comment on that?
Yeah, it is accurate. And I think one thing to keep in mind is any one particular provision, when it starts out, has a reason. I mean, these tax code laws that we're talking about, at one point there was either a motivation or something. But when added upon the ones from last year and added upon the ones from last year and the last year and then last year, you find that you got these layers. And what we've done is we're not taking anything away. So every single year you find yourself getting more and more. So even if you say this particular provision is not that burdensome, you have to take it in context of but what about the last 20 years? And all that added together, it's simple. They have so much time in a day. If you're taking their time by making them comply with regulations, you're taking time away from what they do.
Thank you. I'll be real brief for my last question, Mr. Vitale. Do you think it's reached the point where it's almost impossible for a small company nowadays to do their own taxes?
Yes. We have some very small clients, similar to the professor, and even the smallest of small clients. They have access to TurboTax and a lot of tax programs that supposedly could make their life easier, but we get calls all the time from small companies that still need help with that.
Thank you. Mr. Bankowski, I apologize. I ran out of time there. But
That's right.
I'm sure you'll get more questions.
Yes.
So I now yield to the ranking member for questions.
Thank you, Mr. Chairman. Mr. Min, the payment card pilot essentially compares 1099 forms from payment processors with tax returns to identify underreporting and inconsistencies. If the information on the forms does not match, the IRS sent out notices. What is the benefit of a notice if it leads honest companies to have to put in additional work and to reconcile forms that may be mismatched for unrelated reasons, such as self-tax, tips, so forth?
Yes, ma'am. There's actually two benefits. One is before the notice goes out, you would hope that the knowledge for the minority of taxpayers who don't want or are trying not to pay their full taxes, the knowledge that this matching is taking place will be an incentive to get them to do that. And IRS is seeing some very early data that they believe is showing that that's the case. Again, this is a minority of taxpayers we're talking about. For the other taxpayers, it's as you're clearly, as you're implying in the question, it's not much of an advantage to them if they have to, in a sense, go back and correct an IRS record on this. This gets to why we think it's so important for IRS to have a good evaluation strategy. I mean, the potential for this pilot, like a lot of third-party information reporting, is it can really reduce burden, can help improve compliance. So it could be a big deal. And I realize that all three of those were conditionals that I used, could. But they have to make sure that they implement it the right way. They have to make sure that they reach out to the stakeholders and engage them in the design of the program, and they need to make sure that they're actually measuring the performance so that they know, are we actually getting more benefit for this program, or are we sending out bogus notices to people that's actually causing more headaches for honest taxpayers?
So an important element, of course, is the type of outreach that the IRS will do.
Absolutely, ma'am.
So when you look at tax compliance and the effect that could have on small businesses, did you also look at the fact that since 2010, the IRS lost 18% of its budget. Does that have anything to do?
Yes, ma'am. Is that, and that was the reference I was making to the question of the chairman, is that the IRS needs to engage with the Congress, given how much their budget has gone down. Now, this has all been with added responsibilities, not both in the growth of the number of taxpayers, Affordable Care Act implementation responsibilities, other changes to the tax laws. They are in a very difficult position as an agency, and I realize there's not a lot of appetite, to be looking to plus up the IRS budget,
Right.
Which means why they have to engage in that.
What we need to understand is that by doing so and cutting the budget so that it could be punitive against the agency, in fact, it's punitive against the small businesses because they will not get the type of services that when you place a call, you expect for someone to be able to answer. Mr. Mankowski, thank you, sir.
Yes, ma'am.
You described how accepting credit cards and their related fees is becoming the norm and just another cost of doing business. However, as you stated, the complexity of accepting different cards with different rules about deposits and deductions adds to taxpayers' burden. How does the rising popularity of electronic payment impact your firm's typical small business client?
Thank you. It's been a major impact on the clients. They're finding that in the past where they've just been able to just accept cash and checks, that more and more of the population, for whatever reason, has an aversion to carrying cash, and they're paying with credit cards, even if it's for a $2 soda at the convenience store or wherever else they're transacting business. So it's something that they've really been having to assume the burden of, and with that they have added fees, not just with the processing fees that are going to vary based on the type of credit card that's being used, whether it's a points card or so forth, that tend to have higher rates, in addition to the different rates that MasterCard, Visa versus American Express or Discover. But now they're also finding that, in addition, because of credit card fraud that's also been going on, that now they also have added compliance burdens that they're required to go through, whether it's some sort of training and annual webinars or seminars that they need to undergo to be aware of compliance, and whether there's different rates and different services that they're required to do with if the card's present or if the card's not present, and to make sure that they're not participating in the fraud that they're trying to prevent.
Thank you. The gentlelady's time's expired. The gentleman from Missouri, Mr. Lukemeyer, who is Vice Chairman of this committee, is recognized for 5 minutes.
Thank you, Mr. Chairman, and I'm way over here on the corner. Mr. Williamson, you mentioned in your testimony cash accounting, accrual accounting. You do business with a lot of small businesses, and there's a thought process of lowering the amount where you have to start going to accrual accounting. What would that do to a lot of the small businesses you deal with?
It would make it a lot easier for them to file their tax returns.
If you lower it to...
Lower it?
Yeah,
No.
you're lowering.
We're advocating raising the threshold that would permit you to adopt the cash method to $10 million. To lower that, I think you'd have serious compliance problems. It alludes to the point I was making a moment ago about disrespect for the system. And if people don't feel that filing their tax return adds any value other than having their money confiscated by the federal government, I don't know if you'd get very many correct tax returns as a result.
You talk about noncompliance. I was reading with the problem with Greece this last month or so here, that they have 95% noncompliance with regards to paying their.
Well, I sincerely hope we never slip.
I don't know how in the world their economy can exist if they can't, if they got 95% noncompliance.
I think we see it's not.
They've got a 1% problem, don't they?
Yes, sir.
You also made a comment, and I want to follow up on this, which is quite interesting, that your clients don't understand the law.
Yes, sir.
If you have small business people who don't understand tax law, how can they make good plans? How can they get good business decisions? How can they make good judgments on how they want to run their business? Are you advising them on this? Are you taking an advisory role, or are they just out there like a ship without a rudder, because if you don't understand the tax implications of the business decisions you make, you can really mess up your business pretty quickly.
Precisely, Congressman, and too often that is the case. People make business decisions without understanding the tax consequences of them. And I like my clients to always know they can call me and ask a question, and they won't necessarily get a bill off the top of the, not like the lawyers, but I hope, I would hope that they would call me. But the problem, the law is so complex.
Chair will strike that last remark from you. Just kidding.
No, sorry. But no, you're absolutely right, Congressman. Businesses do not understand tax law and too often make the wrong decision.
Yeah, and the complexity of it just adds to the problem. So
Yes,
we're adding to that problem every year as we go about our business here. Mr. Lewis, you're in the banking business, and got a quick question for you here. We've created fewer businesses in the last 6 years than we've lost. So we've actually gone backwards. And of course, when you're talking about creating businesses, it's small businesses that we're talking about creating. And so, have you seen in your business world that the tax code and the complexity of it and the cost of compliance, all of this is a factor that has caused fewer businesses to actually be created?
Yeah, that's a great question. I think the answer in short is yes. Again, it goes back to simple algebra. At some level, there's only so many hours.
You better make simple algebra very simple for me.
There's only so many hours in a day, and there's only so much time, and there's only so much revenue coming in. And again, look at the banking, look at the financial services, for instance. The last decade, there's been all this bank regulation that's come upon. So just look at the bank itself. What you find is you find all this additional level of compliance that's required, and any one particular provision makes sense. There's a reason for it. But taken as a whole, it becomes problematic because in the end, really, as was mentioned here, a small business owner, what really matters to them is what they can put in their pocket at the end of the day. It's the cash in their pocket. It's what they can do. It's what they can consume. It's to take that money and pay for tuition for their child. It's to take a vacation. It's to pay a mortgage. That's what really matters. And all the rest of this we're discussing is getting to that bottom line. So you asked the question, what kind of an impact does it have? First of all, I can't advise a client right now on the tax law for the current year because we have the extenders that are still out there. How can I go to somebody and tell them what's going to happen with bonus depreciation or 179? They're going out to make a decision right now. They want to make a decision, but instead they're paralyzed because they don't know. Tell me what the law is, they'll say, and then I'll know how to react. You can help me, because after that it's an Excel spreadsheet. You can run it. But before then, without certainty, without permanency, you run into this problematic situation where, yeah, it does impact those businesses.
It's interesting. You talked about 179 depreciation. Last year we did the extender, I think, 2 weeks before the end of the year. And I've got a good friend of mine who runs a business that he sells a lot of rock crushers and drills and things like that for quarries. And he, over the course of the year, sold 11 different drills. Sold 11. But he sold 6 of them in the last 2 weeks of the year. Now, these things cost between $100,000 and $125,000. And I can tell you the same story with regards to farmers buying tractors and farm equipment. They waited to the last 2 weeks of the year in order to make that decision because they were looking for this opportunity.
It certainly wasn't because of Christmas, no.
Thank you. The gentleman's time's expired, but if you wanted to comment.
Yeah, I was going to say, and the reality is that the commentary would be if the tax law has a shorter shelf life than, say, a carton of milk, it's probably something we ought to look at. That's going to impact them.
The gentleman's time's expired. The gentlelady from North Carolina, Ms. Adams, who is a ranking member of the Investigations, Oversight, and Regulations Subcommittee, is recognized for 5 minutes.
Thank you, Mr. Chairman, Ranking Member Velasquez, for hosting this hearing. Tax burden on small businesses buried in the complexities of the tax system is something that we must tackle head on. The state of North Carolina is home to more than 800,000 small businesses, which means that there are more than 800,000 small firms in my home state that potentially have tax compliance issues, including cost burdens associated with tax compliance. Mr. Williamson, how should the current tax code be altered to reduce that cost burden for small businesses?
Well, in terms of the tax return itself, we could make that a lot simpler, as all of us have advocated here with respect to advancing more cash method of accounting so you don't have the need to compute your inventory, cost of goods sold, the depreciation schedules you have to keep. basically treat everything as 179, was alluded to earlier, or as bonus depreciation, 100% depreciation. And so it's simply to prepare your tax return based upon your checkbook and the cash that comes in, the cash that goes out, and we net the two, and that's your taxable income. That makes a very simple tax return.
Okay. Estimates by Internal Revenue Service of the size and the composition of the federal tax gap indicate that small businesses organized as a pass-through entity account for a substantial share of that gap. Their contributions are thought to be the result of honest mistakes born of the complexity of the code and tax evasion tied to cash payments for goods and services. How should the federal tax code be reformed to reduce noncompliance by small businesses? Mr. Williams.
Well, as far as the pass-through entities go, and as was already pointed out here in the testimony, most revenue of small businesses is coming through pass-through entities. We can, again, through the cash method of accounting, easily determine what the net profit is in a business and allocate it to your partners or to your S-company shareholders on the K-1s. The complication that arises is the need to separately account for all the items on a partnership return or S-company return because they might impact an individual partner or individual S-company shareholder differently. That is a problem in terms of the pass-through entities. I would offer, and again, I think proposals have been made for earlier filing of pass-through entity returns so that the information forms to the individual partners or shareholders would be in their hands a lot sooner. And that way they'd have more time to prepare their tax returns, and that would increase compliance.
Okay. I have one final question. Minority firms often have an even harder time getting off the ground and then staying afloat than other demographics of small businesses, particularly as it relates to lending. For Mr. Williams and Mr. Mem, how have you studied the impact that tax compliance has on minority-owned firms, and if so, what is the rate of minority-owned firms closing their businesses as a result of the difficulty in the tax compliance compared to white-owned firms?
Congressman Adams, I do not have those statistics in front of me. I can be happy to do my best to try to find some of that information for you, but I have no information on the relative closures of minority firms versus non-minority firms at my fingertips. I'm sorry.
Would either of the other gentlemen like to respond?
Ma'am, we don't have that information either, but we'd be happy to work with Mr. Williamson and others to make sure we answer your needs on that.
Okay. One challenge to tax compliance for small businesses may be that the tax code has no uniform definition of a small business, and so how should small businesses be defined for tax purposes? Yes.
Yeah, what we have done in the Tax Policy Center is to define them as $10 million of gross receipts. If you look at provisions of the Internal Revenue Code, uniform capitalization rules, some of the other provisions regarding $10 million seems to be a generally accepted threshold, and I think that is what the GAO study used as well.
Would either of the other gentlemen like to respond?
Yes, ma'am. We've used, taking Treasury's lead, we use $10 million. Although, as you point out, there's a variety of different ways that you can do it, a number of employees, but we use the $10 million. I should also point out that the way IRS is organized implicitly assumes that the $10 million, their small business unit has a $10 million threshold of the organizations or entities that it looks at.
Okay. Thank you. Mr. Chair, I yield back.
Thank you. The gentlelady yields back. The gentleman from New York, Mr. Hanna, who's chair of the Subcommittee on Contracting and Workforce, is recognized for 5 minutes.
Thank you, Chairman. The tax gap that you spoke of, Mr. Mon, and everybody alluded to in one way or another, I'd like to talk to you about the underground economy and the propensity for it to grow over time through the difficulty of the tax code and what you see on the ground. Because it's a concern to a lot of people. I mean, there's all kinds of incentives not to pay your taxes. One of them is other people aren't. And the aggregate nature of the 1099s and collecting credit cards, that's pretty subjective. It certainly can be. I'm curious how it's fair. And Mr. Williamson, the idea that you want to, one of the problems with going from 5 to 10 on a cash basis is, and what the IRS does now, is if you buy inventory and call on a cash basis, then basically you're mixing your accrual system with your cash system. So Mr. Mime, if you could address my question about the underground economy and its growth, if you're prepared to do that a little bit, or anybody who'd like to.
Yes, sir. I mean, the tax gap, I mean, as you're mentioning, is enormous. I mean, it's IRS estimates. This is based on 2006 data, but it's about $450 billion a year. And this is a difference between legally owed and actually paid in a timely manner. Some of that is clearly the underground economy, meaning that it's non-filers in the technical term. This is people that ought to be filing that just aren't.
What do you think that? Do you have any idea? How could anyone have an idea what that is? But do you have one?
Well, they go through they have a national research program, so it's an enormously complex set of estimation that they do. Is that the size of the underground economy is probably the weakest aspect of that estimate. A lot of that also the tax gap source is underreporting of people who do actually, I mean, report but don't report the full amount.
But so much happens with compliance on the margin.
Yes, sir.
Virtually everything, right?
Right.
So marginally, difficulty with filing, as Mr. Williamson talked about, the cash basis, which is certainly easier. What do you think that looks like today?
Well, your points are about it being marginal is exactly right, and it gets to what one of the key strategies needs to be, which is assuming that most people do want to pay their taxes. Now, we're not talking about the underground economy in this case, but assuming that most people do want to pay their taxes, and then making it easier for them to do so, because in many cases where there's underreporting, the amount of underreporting makes it hard to justify going after any one individual. I mean, you have to, in some senses, to get a deterrent effect or to make sure that people always know that they have to. But you don't want to spend $1 million going after 5,000, or you can't do that in all cases.
But isn't that part of the problem?
Yes, sir.
I mean, because what you're really doing is you're sending the message that you're incentivizing smaller taxpayers, amounts of money, because you're going after those people where the money is, right? Willie Sutton.
Yes, sir.
But when you look at the aggregate number, you mentioned $450 billion. That would draw you towards an opposite conclusion. It might.
Well, that's why that's why good customer service is so important. That's why third-party reporting that makes compliance relatively easy for people is so important. Because obviously you're making exactly the right point here. Is trying to chase the money after the fact is ultimately not going to be very good. It's not going to be good for the businesses because of the mistakes that could be made, as the ranking member mentioned. It's not going to be good for the IRS because of the cost benefit of that. We need to make sure that we have in place the right independent third-party reporting. We make sure we have the customer service.
So even though the money isn't there, the value of going after those people who fall completely under the radar, not paying at all, the underground economy, there is value in that.
Occasionally, yes, sir. I mean, we can't do that in all cases because but we need to do enough of it so that, as the Vice Chair was mentioning in his questions, is that we don't get basically a sucker tax system where the people who are paying their taxes are the suckers.
Mr. Williamson, how do you reconcile, if you go to 5 to 10 on a cash basis and get rid of accrual for everybody under that, how do you reconcile, and I got about 38 seconds, the inventory?
That's the point, and that was the point in my written testimony, Congressman. We would eliminate cost of goods sold, and that the purchases or construction of inventory would be deducted as those costs are incurred, regardless of when the product is actually sold.
But aren't you giving bonus depreciation to everything that used to be called inventory?
And that's what we were saying. In a world that we would be advocating, bonus depreciation be extended to inventory.
Thank you. Time's expired.
Okay, thank you very much. The gentleman yields back. The gentlelady from American Samoa, Ms. Radewagen, who is the Subcommittee Chairman on Health and Technology, is recognized for 5 minutes.
Thank you, Mr. Chairman. My question is for Mr. Vitale. Is it safe to say that the higher costs associated with the tax compliance obligations that tax professionals endure push small business owners to waste their time preparing their own complicated taxes instead of focusing on growing their business?
Great question. There's probably an element of truth to that. The fundamental problem is going to remain until the code is simplified and clarified. The person who has invested in their business and has a lot at stake is more often than not going to eventually reach out to the professional to try to get the right answer and the best answer possible. And that's an expensive proposition, but the cost of them Not doing that and going the other way, at the end of the day, could probably be much more costly by their failure to comply.
Thank you. Thank you, Mr. Chairman. I yield back.
The gentlelady yields back. I'll now recognize the gentleman from South Carolina, Mr. Rice, who's chairman of the Subcommittee on Economic Growth, Tax, and Capital Access, for 5 minutes.
Gentlemen, thank you so much for being here today. I think I heard directly stated or allusions to the fact in all of your testimony that small businesses are the backbone of the economy and the backbone of job creation in this country, right? Pretty much
Yes.
everybody agrees with that. Beginning in 2009, for the first time since it's been recorded, more American businesses are closing than are opening. Do you think this outdated and burdensome tax code has anything to do with that, Mr. Meem?
That's something that, sir, that we really haven't looked at directly, so I'll have to defer to my colleagues on the panel, if I may. Okay,
well, let me go. Do you think overburdening government regulation, do you think that has anything to do with that?
Well, there are certainly, as we pointed out in this testimony, as other findings looking at regulations in general, there are costs associated with the implementation of regulations. There are costs to small businesses, and as we have a table that shows that if you have for corporations, if you have less than 5 employees, it can be $4,000 or $5,000, or between around $4,500 per employee in order to comply. That's a substantive cost that's imposed on business.
Do you think the complexity of our tax code creates a barrier to formation of small business?
It's the complexity of the tax code creates a barrier to any economic activity. It creates a barrier to compliance. It creates a barrier to economic growth.
Mr. Williamson, for the first time, beginning in 2009 and continuing through today, for the first time, more American businesses are closing than forming. You think our complicated tax code has anything to do with that?
In my personal experience, what it's usually about is I better get out of business because I can't pay my payroll taxes for my employees.
Mr. Lewis, do you think, same question to you, do you agree that our tax code is a burden to formation of small business and to continuing a small business?
I think the tax code is certainly a contributor. One of the things that I think is missing in most of our regulation, which is in essence what tax law is we failed to adequately address the cost benefit. I know I hear it, I see it, people talk about it, but are we really looking at cost benefit from the small business lens? That's the question, right? I mean, you'll hear people, they'll espouse from the floor, this is a good thing, and it outweighs, but I think the real issue is from a small business lens. I mean, one of the things we have is a fundamental—
Mr. Lewis, it's not that I don't want to hear. I do want to hear, but I only have 5 minutes.
All right.
So I have to keep going. Mr. Vitale, I'm going to shift questions on you. Since 2010, notably the date that Dodd-Frank was enacted, bank formations have slipped from an average of 100 per year to 3 per year. Do you think that will have any effect on small business, given that new banks are typically small banks and they're typically the ones who lend to small business?
I believe the answer is yes, based upon our firm and our client base. We're a $1.6 billion revenue firm. 60–70% of our business is labeled as small to mid-market. And with the reduction in the number of banks that we've seen, community banks, local banks, we have seen many of our clients go to alternative markets for their financing. That financing is often much more expensive.
But the really small businesses, those alternative markets aren't really available to them, are they?
The alternative market is usually an angel investor or private investor, and that money is even more expensive.
Yeah. Mr. Mankowski, do you think that the slippage of an average of 100 bank formations per year to 3, which these new banks are typically the lenders to small banks, do you think that will have effect on to small businesses? Excuse me. Do you think that will have an effect on business formation?
I think as far as business formation, not necessarily, but because a lot of the businesses recently, they've been the byproduct of the overall economy where they've been downsized out of their current opportunities, and now they've exhausted their unemployment benefits, and they've kind of been forced into their own businesses. So the bank formation, not so much of causing people to not form their businesses, but I think it hurts them if they're looking for additional revenue. because I do agree that the smaller banks and the community banks seem to be the ones that really are more in tune to lending to the small businesses.
The gentleman's time has expired. Gentleman from Nevada, Mr. Hardy, who's chair of the Subcommittee on Investigations, Oversight, and Regulations, is recognized for 5 minutes.
Thank you, Mr. Chairman. I just happen to be a small business owner myself, or at least I used to be. And Mr. Williamson made the statement, Mr. Lewis, just a few minutes ago, the fact that businesses want to pay their taxes. And I agree. As a small business person, I want to pay my taxes. Would you agree the reason we want to pay our taxes is because we have to have a good, sound foundation to make sure we are profitable in paying taxes in order to receive revenue from banks?
Yeah, I mean, one way to look at it is that small business owner is in a partnership with the Federal Government. There's a lot of services, a lot of an economic ability to make money, and so there's this agreement. And the tax code is sort of like the partnership agreement. Defines how we're each going to behave with each other. And I think the majority of the Americans that own these small businesses are hardworking, they're entrepreneurial, and they want to do what's right. It's when you start adding in complexity, the lack of certainty, this perception of inequality, I think that's where you start getting the fringes where people start to take a step back and either through overt or covert actions maybe are a little less compliant. But I think the majority want to comply.
I believe there's a number of things that are causing small businesses to fail, but in 2012, 64% of all employees were working for small businesses. Today, we have the lowest number of small businesses in the last 3 decades or further. Is it because of our tax regulations, or is it you think it's a combination of a number of things? Anybody care to address that?
Well, I'll just say that it's very difficult for my clients when they decide whether they're going to take the next step and hire someone. As we've seen here today, it's very expensive. Just the tax compliance costs are very expensive. The 941s, the W-2s, the payments every 2 weeks or in a month. That's very intimidating for a small businessman to take on that first, second, or third employee, and then to have the cash flow, of course, to be able to pay them their wage. So in regard to small businesses, that, in my practice, holds them back as to whether they're going to hire those first 2 or 3 people. That's a big, big deal with them, and the tax rules impede that.
Some months ago, we had a hearing here, and they discussed other tax causes to small businesses. And once you grow just even your business a little bit, the average, I think it was, about $1.2 to $1.5 million per year for people to get their taxes done once they reach a certain threshold. Have you seen that, Mr. Williamson, in your avenues? That's just to prepare it to get it to you folks.
That's true. To assemble the books and records, to put them on my desk so I can do the return is quite a procedure for them. And to ask me or anyone at this table to do that kind of work can be very, very expensive. And it's very hard to find people that have the skills to assemble that financial information for them in order to have me even begin the tax return. No question about that.
The 1099 form, Mr. Mikowski, why is it the 1099 requires so much for small businesses, such a burden? Can you go in a little deeper process of what your discussion was there?
Yeah, there's 2 aspects. First is that there's common belief that there's items that go onto the credit card receipts that aren't revenue to the business owner, such as sales tax, gratuities, and even if someone has a return of merchandise that they purchased. If you take a restaurant as an example, if you put your gratuity onto your credit card, that'll show up on the 1099-K, but that's not revenue to the business owner. Another concern from a 1099-K perspective is if you have one of your vendors that pays you with a credit card, where normally they would issue you a 1099 miscellaneous depending on the type of service, if you pay with a credit card, you no longer have that responsibility to issue that person the 1099 miscellaneous if their only payments were credit cards in excess of $600 total for the year. If you now had payments under the $600 that were totaled under with cash or checks, you're relying on the credit card processor to issue the 1099 miscellaneous. In essence, it falls on the 1099-K, not through the 1099 miscellaneous, a form that the government's not really using for full verification of the income for the business owner.
Okay, let me just one last question, Mr. Vitale. For as the IRS, Can you elaborate how they can and should be providing us a better security for small businesses and for all businesses in their businesses to make sure we're protecting that security of those tax returns? And what?
Sure. One of the things that I highlighted in my written testimony was the use of PINs. We have some experts in the office that specialize in security, cybersecurity, and I believe the way the world is going towards a PIN-based system. The Social Security, the current Social Security number is very vulnerable, very easy to get at. It's very easy to hack, and that is the gateway to a lot of theft. And I believe the transition has to happen sooner rather than later.
The gentleman's time has expired. We're going to move into a second round, and we're going to start off with the ranking member, Ms. Velasquez, for 5 minutes.
Thank you, Mr. Chairman. Mr. Williamson, we know that there has been a movement away from businesses organizing as C corporations in favor of pass-through entities. Today, corporate tax revenue makes up less than 10% of our federal revenue. What is about pass-through entities that make them such an attractive business structure, and what is the effect on small firms when our tax policy hinders their use?
Well, that's an excellent question, and obviously the answer is, of course, C corporations are subject to 2 levels of tax, once at the C corporation level and then a second tax when any sums are distributed to the shareholders. That's why you have a continuing decline in C corporations, particularly when you have S corporations available that are corporations for all purposes other than the Internal Revenue Code. And also now you have the LLC, the limited liability company, that provides the same limitation on personal liability of the owners of the business. So that's why you've seen C corporation numbers go down and pass-through numbers go up.
Thank you. Can you elaborate on whether individual tax rates influence business decisions?
Well, that goes in, again, my written testimony referred to that, is that if we're going to reduce the corporate tax rate in this country, some consideration must be given to small businesses, that the LLC, the S corporation, indeed the sole proprietor, will be paying effectively higher rates than C corporations. And C corporations don't have to pay dividends. And the owner of a C corporation can sell the stock rather than take distributions. So some consideration must be given to the sole proprietorship and partnership in LLC industry.
Thank you. Mr. Mankowski, you mentioned the PMCT pilot program had some drawbacks, including an overly simplistic, typical, or unusual response when comparing a client's data to the database. What recommended changes would you make to better implement the program this coming tax season?
Thank you. As far as the implementation, if the IRS really wants to maintain the anonymity for the users, they really can have some of the specific results that many of us practitioners would be looking for to know where their ranking is inside of the usual or the unusual. So that it's almost a catch-22. How much information do you really want to get to see where you're at in the specific categories? I think having the ability to have it rolled out earlier this year as year 2 to the practitioner community, at least for those who've been in the pilot program already, will just add on to the number of users that are going to be familiar with the tool, that now when they're doing their preseason training, it will be more at the forefront that this tool exists, even to the extent to go back and look at the 2014 tax data and see where the results came in, meet with their business owners and say, here's where some of the results were coming out, use it as a preseason tool, and potentially have the ability to advise our clients and work with them so that they can avoid that love letter from the IRS that they get usually about a year and a half after the fact, that at least if it's addressed and have some general information and answers when they get a letter from the IRS if their results were out of spec, you can pull the results out of your file and say, Mr. Business Owner, remember we talked about this last year, here's some of the information, we've done the legwork, and then they're able to better answer the notices at that point.
Thank you. Thank you, Mr. Chairman.
Thank you very much. Gentlelady yields back. In my 5 minutes, I would like to do something a little different. We've had some great answers to some, I think, very good questions as well. But rather than ask specific questions, I would just like to, we're making a record here. If there's just one point that you would like to leave with the committee, something you'd like us to implement or act upon or consider. I'd be happy to hear from, and since I didn't get to you, Mr. Mankowski, maybe I'll begin with you, and we'll just go down the line. So you've got about a minute each. You don't have to take it all up, but I'd ask you not to probably go any further than that. You recognize?
Thank you. As far as one parting comment, I think that the IRS has almost been in a catch-22 this recently. They've been asked to do more and more between implement the Affordable Care Act and last year along with repair regulations, and for the current year also implement the employer shared responsibility portions. They're doing this with, I believe, one of the congressmen had mentioned that their budget has been down 17 or 18% over the last few years, and that's an annual decrease that they've been getting. So they've been having to do more and more with less resources, and even now they're looking at saying, well, how come you haven't done more with the 1099-K? You've reached a point where they're in a hiring freeze, they can't bring on staff, and as not bringing on staff, they're also having the attrition from the higher level people. The people that are not coming on now are the ones that may be a little more tech savvy that can really take the service to the next level to make it a better service for all the practitioner and taxpayer community.
Thank you. Well, maybe I'll just one quick thing in response. If perhaps they shouldn't use at least some of the resources for targeting groups who have a certain political persuasion and wasting resources on that, and then having to have their people come and testify and defend themselves, and records, are lost and all the rest too. But I hear what you're saying and tend to agree with it. Mr. Vitale?
Sure. I think to that point, the one observation I have in the recommendation would be to have the service reevaluate how it deploys its resources, where it spends its time. With my clients, with businesses, those that are very successful have good strategic plans. They have a plan. They invest the right time and money into the areas that yield the best benefit. As a case in point in my written testimony, I spoke at the end of a client that I have under audit. Clients lost money, restaurant business, 5 years, very difficult. 2 partners put all their own money in, lost it, borrowed money, paying that off, lost it. And the auditor has spent 3 days auditing a company where even if she makes a change, it's not going to make a difference. So I think those 3 days, 24 business hours, could be spent by people to service doing better things than that.
Thank you. I've only got 2 minutes left. Mr. Lewis?
I'll be quick.
So 45 seconds. Thanks.
2 things. Number one, what can Congress do? Congress can support small businesses by reforming the tax code. It needs to be simple, it needs to be fair, and it needs to be equitable. You give that to small business owners and they'll respond. They want it, they need it, you can give that to them, that would be wonderful. Second thing, IRS services. There's no substitute. There's no additional reference point or no additional source that we can go to serve those clients and to serve those taxpayers.
And the third one real quickly?
That's the second one. That's the 2. Just IRS services,
very good.
Focus on those.
Thank you. Mr. Williamson?
Yes, strategically, you can have carve-outs for small businesses. You're considering international tax reform as we speak. You can have carve-outs for small businesses of under $10 million so they do not have the same level of compliance. They will not go overseas. Take a look at the forms, take a look at the requirements. Tactically, and I think it's been mentioned here, the $2,500 increase to the allowance to simply deduct anything and not have to depreciate it.
Thank you very much. And you got my last 50 seconds.
Do my best not to take the full 50, Mr. Chairman, is that I think you've gotten excellent ideas, and so I won't repeat them, but just align myself with those and go off on a bit of a different direction, and that's on the identity theft at IRS. It costs them about $5.8 billion a year, IRS estimates, in which they pay to identity thieves. Now, they estimate about $24 billion before it goes out. That's a real target of opportunity for them to be more strategic in going after, and it's a priority area for them to reduce the amount of identity theft as it affects IRS.
Thank you. Thank you. My time's expired. The gentleman from New York, Mr. Hanna, is recognized.
Mr. Williamson, I'll get back to your cash basis. How do you manage? I mean, we know even if you're on accrual now, you're on accrual. It doesn't matter the size necessarily. I mean, the $5 million point for cash. But how can you how do you avoid cheating on your by essentially buying inventory, growing your business, or maybe that's what you want to happen. How do you
I agree, Congressman. That's not cheating. That's growing.
Right, right. But I mean,
that's what we're all here for.
But isn't it also kind of becomes manipulative if you are essentially with 179, you're saying go out and buy a piece of equipment, which may or may not be good. You have to hope the owner does that smartly. On the other hand, you could conjecture that the same thing would happen with inventory simply to avoid paying taxes. But I guess that's part of your point, isn't it?
Frankly, I can't think of anything less manipulative than a totally cash basis of accounting, and simply use the checkbook as we're advising. Now, clearly, it may not be as financially accurate, and I'm not here to say that if you're filing SEC reports, you need to be on the cash basis. Oh, certainly not.
What you're suggesting, though, is ultimately it works itself out.
Oh, yes, I
over
said that.
time,
yes.
Whether you do something more one year or not as much the next year, over a period of time.
Over the life of the business, you recognize the same amount of income and have the same amount of expenses.
I understand.
It's all timing.
Mr. Mime, you want to speak to that at all?
No, sir. That's not an issue that we looked at in any detail.
So with the IRS cutting back on their budget, I mean, it really is kind of, everyone here has complaints with the IRS for one reason or another. But back to the 1099-K thing, I'm guessing, Mr. Mankowski, that you don't like it that much. You don't like aggregating, turning a lot of it into guesswork, comparing businesses on the aggregate, and then coming up with conclusions that this person or that person, company or not, has complied or not.
I don't believe that the form itself, at least in my estimation, was kind of created to get a lot of your people that have been conducting business on the Internet, your eBay sellers. And from that perspective, I think the forum has been very successful. There's clients that have come in that have no idea that they had $1 million worth of business that they had done on eBay. So it doesn't mean they made $1 million. They just sold goods to that level. So from that perspective, it's been accurate. Unfortunately, the majority of businesses aren't conducting their business on the Internet, and it's really been their collateral damage, because they're out there reporting their revenue as it is, and they've been doing that all along. But they're the ones that are getting the notices that—
The ones being like dragnet. You throw this giant net in the water, and some people deserve to be caught, others don't.
Right.
But everybody may be inconvenienced based on some subjective notion that the IRS has about the general idea of what that business ought to be paying or this business.
Right. Unfortunately, a lot of those businesses that are getting the large credit card sales through their online businesses, especially, I'll take someone a client who's on eBay. By the time they have their listing fees, their shipping fees, their PayPal fees, and then their cost for the product, they don't make a whole lot of money.
Let me take a rare moment to defend the IRS in this way. If you were them and your budget was going down every year, this would be exactly what you'd want to try to do, to aggregate businesses based on numbers from 1099s, come up with broad conclusions about who's good and who's bad.
From that perspective, yes. And there's just, I think that we need, and time will hash out what needs to be adjusted out of this form, specifically the restaurant owner with gratuities, sales tax, and how that's going to be affected in how they're looking. The IRS is sending out soft notices that as long as the taxpayer responds, here's my brief reconciliation, here's my gratuities, and this is my number I reported, they're fine with that. It's just a lot of extra work on the business owner to really go back and try to figure out whether it's right or wrong, because they don't track their revenue based upon whether it's credit card, cash, or checks.
Right. If the IRS published those numbers, I suppose it would be another problem, what they're looking for, what they're not looking for. My time's expired. Thank you, Chairman.
Thank you. Gentleman yields back. Gentleman from South Carolina, Mr. Rice, recognized for 5 minutes.
Mr. Mankowski, you were talking a minute ago, when I was speaking my first 5 minutes, I was talking about maybe some of the reasons why, for the first time in American history, we're seeing business dissolutions outpace business formation. And you said earlier that the IRS has had to implement Obamacare in the last 2 years, and we didn't give them any more resources to do that. Hasn't small business had to implement Obamacare in the last 2 years too?
Small business, if you look under the IRS description of small business being the $10 million and less, They have been because they're the
Okay,
businesses.
they did have
Yeah.
to implement it too.
Yes.
Did we give them any additional resources to do that with?
I don't know the answer to that, sir.
Well, could that have something to do with the slowdown in formation of small businesses?
Yes.
Okay. The tax code. I was a tax lawyer or CPA for 25 years. This stuff is fun to me.
I'm very sorry.
Us too.
The tax code was designed 50, 60 years ago, and it was competitive at the time. Does anybody up there believe that our tax code remains competitive in the world?
I'll use an example that a friend of mine recently had a baby, and she was saying, oh, well, over in France, as an example, they get paid so many months of child care or maternity leave. And a quick search said, well, that's great, but based on your income level, you'd be paying 40+% in annual tax just to the government compared to what you're paying now. So, yeah, you may get an extra 2 months or so of paid maternity leave, but every year you'd be paying in 10 to 15 to 20% more in tax.
Keep going. Do you think our tax code is competitive for American? Does our tax code make American business more or less competitive? Yes, or more or less?
I'd say less, just from a compliance perspective.
You agree with that across the board? Thank you. Do you think that has something to do with the decline in business formation in America? Mr. Mankowski, and I have to ask you to answer quick.
Yes, I do.
Okay. Next question. Did each of you have the chance? Well, I assume all of you had the chance to review Dave Camp's tax reform proposal last year. I want to know just a one-word answer from y'all. Would that make United States tax code more or less competitive in the world? Mr. Meem?
I can't give you a bottom line on that. We did review it. I mean, we worked with the committee, and they used a lot of our work as they were putting it together, but we didn't come to a bottom line.
You don't think it would be preferable to what we have now?
I really can't speak to that.
Mr. Williamson?
I haven't looked at it in quite a while, but I would say it would make America more competitive. Yes,
Mr. Lewis?
Representative Dave Camp should be commended for what he did. It showed us what real reform would look like, and that effort itself, I know we'll have issues with any particular provision, but that overall effort, that's exactly what we're talking about.
Mr. Vitale?
I believe that's a better start than what we currently
have. And Mr. Mankowski?
I believe it's a good start, but it would also complicate things a lot as well.
Okay, and that came out of the House Ways and Means Committee. Mr. Meem, have you had a chance to review the President's tax reform proposal?
No, sir, we have not.
Have you seen it, Mr. Williamson? Have you gone through it?
I haven't gone through it. I've seen portions of it, most notably regarding the cash method of accounting rules, that he'll take the $25 million with some carve-outs for qualified personal service corporations, I think.
Mr. Lewis?
Yeah, the same thing as Mr. Williamson. I've just seen particular provisions, and some of those weren't necessarily small business favorable.
Have you seen the whole package put together?
I wouldn't say the whole package, no.
No, I hadn't either. I don't think there is one.
Yeah, I've seen parts of it.
My point in this is I don't think the President's made a specific proposal. I think Dave Camp and the House Ways and Means Committee made one. I don't think the President's put one forward. And if we're going to get tax reform done, we got to have leadership. And when you look at these things that I've been talking about, between the imposition of Obamacare, between Dodd-Frank, between our ancient tax code, you can understand, if you look at the statistics on the decline in formation of small businesses, you can understand why this is happening, just to put a perspective on it. Thank you very much.
Thank you. The gentleman yields back, and we want to thank our distinguished panel for being here this morning and now this afternoon. We appreciate it. I think the GAO report has certainly confirmed that small firms are having a tough time dealing with the tax code, and we need to simplify it and reform it. I'd like to say we're close to that. However, I'd like to be truthful, and I don't think we are close to that, although we're working on it. But you all have given us, I think, some very good ideas, and particularly as it would affect small business folks. So thank you for that. And I would ask unanimous consent that members have 5 legislative days to submit statements and supporting materials for the record. And if there is no further business to come before the committee, we're adjourned. Thank you.
Thank you, Mr. Chairman.
Nice work. Nice work. Troy, nice work.
Nice to meet you.
Yeah, good work.